It took less than 2 weeks for Total Energies say to put a massive green hydrogen project with Adani Group on hold after the Indian conglomerate was rocked by allegations of fraud. The deal, part of a plan in which billionaire Gautam Adani's clean energy business would have invested $50 billion over the next decade in the emissions-free fuel, remains in limbo, a victim of Hindenburg Research's explosive short seller report. As global interest rates rise, India's energy transition investments are falling behind other major nations, while the Inflation Reduction Act is opening up more clean power investment opportunities in the US and its free trade partners. Let us look at the barriers that are preventing the government from meeting its goal of tripling clean electricity capacity by the end of the decade in this video. New Delhi wants to increase its 169 gigawatts to 500 gigawatts by 2030, increasing its share from 41% to almost two-thirds, a key step towards net zero by 2070. The world's third-largest emitter will continue using coal if it misses this target. That's bad for a fast-warming planet and an Indian economy hoping to attract investment from multinationals under pressure to decarbonize their supply chains. India installed 15 gigawatts of grid-connected wind and solar capacity last year, 44% more than in 2021, but it fell short of the 2030 target. Investment in the deployment of renewable energy technology rose about 4% to $11.5 billion in India last year, but that's still lower than a recent peak of $12.7 billion in 2017, according to data compiled by Bloomberg Nef. It's also a fraction of the $274 billion total in China and $49.5 billion spent in the US. India's unstable policy environment, with import levies, court orders and doubts over whether the state-level utilities will honor commitments to purchase electricity, are also giving international investors pause. Indian projects must offer much higher returns than those in less risky destinations to compensate for uncertainty. From a global investor's perspective, risk-reward in India today seems slightly out of line, said Pramod Kumar, head of investment banking at Barclays Bank India. If Indian projects offer returns on equity of 11% to 12% and debt of 8%, globally people are saying given the inflation impact, these returns seem somewhat low, he said. To meet its 2070 net zero goal, India requires investment of $160 billion annually across its energy sector through 2030, according to the International Energy Agency, roughly triple current levels. With the industry heavily reliant on a handful of local billionaires and mounting hurdles facing international investors, it's hard to see the country attracting that amount of funding without an aggressive effort from New Delhi to improve its policy settings.